What we've seen over the past year is that the number of properties available for rent has fallen by another 7.1%. And as you said, it's a record low. But if we look at where the changes are happening, it's largely the major capital cities. So the number of properties available for rent in Sydney is down about 12.5% from a year ago. If we look in Melbourne, it's down more than 20%. So we've got this mismatch between the number of people wanting to rent a property and the number of rental properties available. And that's why rents have risen so significantly over the last 12 months.
And tell us about the factors behind that. What is causing this?
Well, supply is a big one. We haven't built a lot of new houses over the last few years, and most of what we have built has been for owner-occupiers. It hasn't been purchased by investors, or it's not built to rent. And then on the demand side of things, during the pandemic, we saw the average household size shrink. So that created more demand for houses. And of course, now we've reopened the borders, and over the past year, we've had about 560,000 people come into Australia from overseas. Most of those people don't own a property, so it's exacerbating the challenges for renters.
What's the outlook with this?
The outlook's unfortunately not great. There is a lot of housing under construction, but as I said, most of that is for owner-occupiers, not investors. We're starting to see some more investors coming into the market, but it's not really offsetting the investors that are exiting. The rate of population growth is forecast to slow from here, but still be well above pre-pandemic levels. So unfortunately, it's still going to be a tight rental market, and it's going to be tough for renters. I would say that I think rents probably won't grow as rapidly over the next 12 months as they have over the past 12 months, but they're still likely to rise.
And can you tell us a bit more about this city and regional cities divide?
Yeah, sure. So during the pandemic, a lot of people wanted to move regionally, and that was because of lifestyle, and people didn't know how long lockdowns were going to stick around. And supply couldn't respond really quickly. So rents increased really dramatically in a lot of those regional markets. Fast forward to today, people that have moved regionally are coming back. Others are deciding that they want to stay there and they're buying their own property. So that's easing some of those rental pressures. Whereas in the capital cities, we've now got a really rampant rate of population growth at the moment. Most of those people are going into Sydney or Melbourne, and if not there, Brisbane, Perth and Adelaide. And that's creating more competition, plus the fact that people that move regionally are coming back. Kids get older, want to leave mum and dad's house and are looking for rentals as well. So you've got this big swing from very strong demand regionally to now very strong demand in the capital cities, which is unlikely to really slow down over the next year.
Yeah, this makes a really difficult situation for a lot of people. It obviously has social effects as well. Now, correction will take time. Are there short-term solutions that should be considered?
I think the best short-term solutions is trying to get more people to buy their own home. Now that's harder because interest rates have gone up, 400 basis points. They might go up again next week. Borrowing capacities have fallen on the back of that. So it is hard to make that shift out of renting to home ownership. But the federal government does have some policies there, like shared equity schemes that could be attractive. The other way that you could try and do things is to make it more attractive for investors to come into the market. In saying that, I don't think politically anyone's going to choose that option. So we need to build a lot more houses, but in the short term, it's about trying to attract more investors into the market or trying to get more people buying their first home and therefore freeing up that supply.
And building more homes, obviously that has a good effect long term, but in the short term, that can have unintended consequences as well, can't it?
Well, it can. I mean, we don't have really the capacity to build the number of homes we need. We've got huge amounts of infrastructure construction going on, so that takes people away from building homes to go and build roads and rail and things like this. So we really need a big investment in the capacity to build more homes. But even for developers and construction companies, their finance is the highest it's been in a decade given where interest rates are. And getting pre-sales is increasingly challenging as well because you don't have as many buyers for brand new properties as you did when interest rates were 2%.
So ahead of any of those short-term solutions, if they would come, and with this situation of so many rentals being unavailable to people, what are the trends that we're seeing in terms of what people are doing to cope with this?
Well, the reaction is going to be that people are going to have to either move further away from where they would like to live, which is obviously an unideal outcome, or it's going to be they have to rationalise on their size. So that means if they're renting a house, maybe moving into a unit. if they're renting a unit, maybe consider going back into share houses. And we did see a lot of share houses break up during the pandemic. One of the responses to these higher rents is likely to be that we see more people going into share housing in order to save on the cost of renting.